Crisis, it is spilling out of America. Last week, 2 US banks collapsed. It set off a chain reaction.
Indian banking system is backbone of our Indian economy. From controlling money flow, funding businesses, and shaping the financial growth. At the core, how does a bank work? How do banks create money? If they create money, why do banks fail? And most importantly, can we trust the bank and put our money into banks? Today in the episode 4 of The Bigger Picture, we are going to uncover these hidden truths behind the Indian banking system. Banking in India has evolved a lot, from informal money lenders in the ancient times to the formal banks and to the fintech startups today. It has been a remarkable journey. The first modern bank in India is established in 1770s, Bank of Hindustan. Later in 1861, British introduced Paper Currency Act to take control of money. But in 1935 only, the RBI was formed to regulate all these kind of banks. Around 1965 to 1980 time period, we have seen major private banks establishment and growth. Example HDFC, ICICI. Around 1990s, we have LPG reforms in which globalization was a part, and due to globalization, we have seen many foreign players into the banking market. Right now, we are into fintech age where we see many banks doesn't have branches physically. Indian banking system is structured into multiple layers. At every layer, there will be a bank which is serving certain kind of communities in India. Let's dig deep into this. Scheduled commercial banks, which are further divided into 3 categories. First one, public sector banks. When I say public sector banks, you might have got an idea about about SBI, PNB, etc. These are basically government owned banks which primarily concentrate on masses. This is the reason behind that is the reason why they usually have low account maintenance fee and low charges for any service. Of course, when they are serving masses, it takes time to do a process because there are huge pending files on their desk, ultimately resulting in the delay of a particular process in public sector banks. Now the second type of banks are private sector banks, which are established in a mode to serve the customers. So here the account maintenance fee will be high and other charges when you default will be high. Examples of private sector banks are HDFC, ICICI, etc. The last category are foreign banks, example HSBC, etc. Foreign banks or multinational banks like HSBC, Citi are established to serve global audience. The second layer have cooperative banks, where they primarily concentrate on lending money to small farmers, tenants, or any other economically poor section people. The third layer have regional rural banks which concentrate on agricultural and small farmer lendings. At the fourth layer, we have payments bank or small finance banks. Payments bank, I'll give you a simple example you can understand. Paytm Payments Bank, Slice Bank, or FI Bank. These are payments banks which doesn't have a physical office, but still they operate as a bank. Additionally to this, in this layer we have NBFCs, where non-banking financial corporations, they lend money or do any kind of a monetary business, but still they are not categorized as banks. So these are the main 4 layers exist in India in the banking sector. How do banks create money? In the introduction, I told that banks create money. Do they really? One of the biggest secret is bank doesn't just store money. They also create money. During this process, there involves a risk for the bank's existence itself. Consider you deposited 1 lakh rupees in the bank. Now, as RBI regulates, keep the 4% of 1 lakh rupees inside the bank and can lend the remaining amount. When the loan is created, automatically loan generates around 8 to 10% more than that interest, which is received back to the bank again. This is what money creation. The cycle repeats, expanding the money supply. Process called fractional reserve banking. This is the reason behind the bank's collapse. When everybody withdraws money at once, the bank doesn't hold any money at that particular point of time without any reserves, automatically leading to the bank's collapse. Due to RBI's strict rule of 4% should be kept at the bank, Indian banks saved during the global recession back in 2008. But banks still have ongoing raising NPAs and more defaults. We are going to know more about NPA in later part of the video. Just stay tuned till we get there. If you don't understand the meaning of a NPA, which is a non-performing asset. Let's see the bank frauds happened in Indian economy, so you get an overall picture on the Indian banking economy. First thing we are going to discuss is PNB scam 2018, where a person named Nirav Modi have defrauded PNB for 11,400 crores using fake guarantees. Yes Bank crisis 2020. Risky loans led to near collapse requiring RBI intervention. IL&FS scam 2018, 91,000 crores of rupees default due to bad loans. Beyond scams, India's biggest banking problem is non-performing assets, loans that borrowers fail to repay. To explain about non-performing assets, we need a complete new video for it. So I have stored the topic for a newer video. So we'll debate about the non-performing assets, how they are created, to whom they are sold by banks, also about what is called a non-performing asset. Basically, if you doesn't pay any interest or a principal back to the bank for 90 days, you can be considered as a non-performing asset to the bank. Then you are categorized as a NPA by the bank. Banks lend money to big corporations whom finally may default. These bad loans weaken and bring the credit crunch to the bank. Banks are even sometimes bailed out by the government using our money, which is taxpayers' money. Government have few initiatives for this. First one is insolvency and bankruptcy code, a legal framework for recovering unpaid loans. Bad banks, new institution to take over stressed assets. Stricter RBI monitoring, increased audits and corrective actions. Despite all these measures, NPAs continue to haunt the banking system. Do you think, are we moving towards a banking crisis in India? Banking is shifting towards digital finance and blockchain. Rise of UPI and digital payments you see every day. As a flower stall, have a UPI QR code today where we scan and pay through UPI. Fintech startups and neobanks. As I told, fintech startups are in boom today. Many companies like FI, Jio, Airtel, Razorpay offer digital bank accounts, replacing the physical branch. Rise of neobanks who saves crores of rupees relying entirely on apps. These neobanks by fintech startups provides faster and cheaper services. The new blockchain technology can be adopted into the Indian system, where we call it DeFi, which is decentralized finance. There will be no intervention of the bank here. The financial transactions can be done without bank in decentralized finance. That leads to a question: if India embraces fully blockchain, would the traditional banks collapse? Banking is just not about savings or loans. It is about power, control and economical stability. As we move towards advanced technologies like AI and blockchain, will the traditional banks keep up with us, or fintech startups and neobanks take the lead in the market? This is going to be the bigger picture which is to be discussed in the comments below. So go to the comment section and let me know what do you think about fintech startups. I would love to read your comments and know your opinions. So right now head to the comment section and let me know what do you think. Can we trust banks keeping our money in the traditional banks, or should we adapt to the fintech startups, neobanks? If you have watched it till here, I hope you liked this video. Let the YouTube algorithm know that you liked this video. Your subscription to the channel will be definitely appreciated. Thank you so much for watching. Until next video, signing off, Rohit G. Sharma in the bigger picture.